So we know that we get a break of the pre-pro low, and if it's a failed attempt, it's a set play for us to look for a move to the upside. Now, it's been working quite effectively of late, so that in itself invites other participants who maybe have noticed it to look for it, so it becomes crowded. So basically we're going short as I'm trying to explain this at the same time. Now, the timing of this move, of course, is pre-Hong Kong, isn't it? Well, now the Hong Kong market's open, and there's the opportunity to catch out the crowd by fading it. So I've just used these failures in here, that build up of long inventory that you can see, plus near the highs, not terribly much acceptance, still time to get in. Now you add that to what I was covering in prep, which is, when we look at the daily view, this is what technical traders are likely to be observing. See this little pattern, for want of a better word here? Watch for shorts who wish to, well, firstly look for longs getting trapped coming off the lows. And then as we move lower, you'll probably find some sellers want to chase this market down. And it's fine to be part of the exit order flow of longs, but then cover as shorts start to initiate, and we'll look for the move back in that direction. We're on side, so we didn't really take heat. And now that we're on side, the heavy lifting's been done, because now it's just a case of being able to eradicate risk. And what happens from here is, sure, the ideal outcome is that we get paid, but really the most important component to this is being able to reduce the risk. So what's going to get me to exit? I want to see some of this long inventory that's taken the bait, just following the tape here to manage the final stages of this, because we've seen liquidation, so we're ready to cover from everything that we've seen, using a multiple points of evidence approach, continuing to take some money out here. So we want to think about the other component to this, which is looking for new shorts to initiate, which will fuel a potential reversal. Flat now and looking to see whether or not we get late shorts forced to cover at higher prices and look to benefit from their order flow. But that completes that, really what is phase one. No, we didn't get out at the bottom, but we took a piece out with low risk. The key part of identifying trades to participate in is being able to take that risk off immediately or very close to it. The rate of depreciation or decline has slowed. So amateurs tend to jump in, pros are patient. So we'll wait for the market to show us when it's time to enter, to again repeat taking off the risk really quickly. Okay, so we talked about the amateurs jump in, pros are patient. So haven't bothered with this terribly much. We can look at a short opportunity here with super tight risk and looking for the trade to move pretty quickly onside. And regardless of whether this works out, as long as you get that cushion, ideally we get onside enough that should you have to cut the trade, it doesn't actually cost you anything. So it's just that patience, waiting for the market to give us a low risk opportunity that is pretty well poised to move on side immediately. And that's the heavy lifting from here. The trade either pays or it doesn't, but at least we're protecting our backside. More like a scalp here, because we've moved into quite a highly traded area for the ASX only, and you can see these multiple failures. So now I'll be looking for the opportunity to get long. This notion of going short's over now. Now it's okay, as I say, with these things, just to probe something and take more of a scalping approach. If it doesn't move your way, you just exit. But if it does, you can leave it there, and then it can start to build the foundation towards a bigger position. You should see some short interest come into this Hong Kong VWAP because of it anchoring the market to the downside last time we're up here. And so now if we see some sellers trying to work positions off this, they're kind of late to the party. We've already seen the market move down once. Yeah, have a good go at it, but fail. So we're watching for sellers to try to work shorts off this area and then get caught. And what that'll do is not only put these shorts here under pressure if the price moves up, but have a think about all those in the market that have been leaning on this as their line in the sand. So it's a double whammy. So this is the type of move that's pretty aggressive now to go into low acceptance. So I just want to be long. So we discussed yesterday during prep how, yeah, we'll take long and short trades like we always do. But being aware of the positioning of inventory, also getting feedback, looking at the commitment of the traders report. The big paying trades are going to be on the long side. So we've got to that pre-pro low, which we tend to see reaction. So another good spot to take some money. But also when we just step back for a moment and look at the move up, it's pretty obvious that the market's gone up. We're not in the early phases of the move where we didn't get in at the bottom, but we certainly got in pretty early. But now when you look at it from this perspective, you can see that, well, the outcome of this is pretty well known. So that's another reason that justifies taking some money. It's probably a good opportunity to maybe have a bit of a break.